Payday loans promise quick cash. They are often advertised as a fast and easy way to get money when you need it most. The allure of instant cash can be very tempting, especially when you're in a financial bind. They seem like an easy solution. The process is straightforward. Walk in, fill out a form, and walk out with cash in hand. No lengthy credit checks, no waiting period, but be careful. These loans come with big risks. The convenience comes at a steep price, and it's crucial to understand the potential pitfalls before diving in. It's important to understand what you're getting into. Payday loans are not just about quick cash. They come with terms and conditions that can be quite complex and often unfavorable. Payday loans are short-term loans. They are designed to be a temporary fix, meant to tide you over until your next paycheck. You borrow a small amount of money. Typically, these loans range from a few hundred to a couple of $1,000s, depending on your income and the lender's policies. You must repay it quickly, usually by your next payday. This short repayment period can be challenging, especially if your financial situation doesn't improve as expected. These loans are marketed towards people with bad credit. They are often the only option for those who can't get approved for traditional loans due to poor credit history. They may seem like the only option when you need cash fast. The urgency of financial emergencies can make payday loans appear as a lifeline. But here's the catch: payday loans come with extremely high interest rates. These rates can be astronomical, often reaching several 100% APR. They often include hidden fees. These additional costs can be buried in the fine print, making it easy to overlook them until it's too late. These costs can quickly add up. What starts as a small loan can balloon into a significant debt, making it even harder to get back on your feet. This makes it very difficult to repay the loan on time. Missing a payment can lead to additional fees and higher interest rates, trapping you in a cycle of debt. Before you consider a payday loan, think carefully. Assess your financial situation and explore all other options. There are better ways to manage your money. Budgeting, financial planning, and seeking advice from financial counselors can provide more sustainable solutions. We'll explore these alternatives later on. Stay tuned to learn more about how you can avoid the pitfalls of payday loans and make smarter financial decisions. Let's break down how a typical payday loan works. These short-term, high-interest loans are often marketed as quick fixes for financial emergencies, but they can lead to a cycle of debt that's hard to escape. Imagine you need $500 to cover an unexpected car repair. Your car is essential for getting to work, and without it, you risk losing your job. You visit a payday lender and provide them with your bank information. The process is quick and straightforward, designed to get you the money you need as fast as possible. You agree to repay the loan plus fees when you receive your next paycheck. This agreement often includes a high interest rate and additional fees that can add up quickly. The lender gives you the $500. It feels like a relief to have the cash in hand, ready to fix your car and get back to your routine. But here's where the trouble starts. The relief is short-lived as the reality of the loan terms sets in. They might charge you a fee of $75 for a 2-week loan. This fee, combined with the high interest rate, means you're paying a lot more than you initially borrowed. That's already a significant chunk of your borrowed money. Fast forward 2 weeks. The due date for repayment arrives quickly, often catching borrowers off guard. Your paycheck arrives, but it's smaller than expected after repaying the loan and fees. This leaves you with less money to cover your regular expenses. Now you're short on cash again and might be tempted to take out another payday loan. This is how the cycle begins, with each loan leading to another. This is the payday loan cycle. It's a repetitive pattern that can be difficult to break, trapping borrowers in a loop of debt. It's easy to get trapped in a pattern of borrowing and accruing more debt. The initial loan, meant to be a quick fix, becomes a long-term financial burden. The high fees and short repayment terms make it difficult to break free. Borrowers often find themselves in a worse financial situation than before they took out the loan. Understanding how payday loans work is crucial. It's important to explore all your options and seek financial advice before committing to such high-cost borrowing. There are often better alternatives available, such as personal loans from a bank, credit union options, or even borrowing from friends and family. These can provide more manageable repayment terms and lower interest rates. By making informed decisions, you can avoid the payday loan trap and work towards a more stable financial future. Payday loan interest rates are shockingly high. We're talking about annual percentage rates that can reach 400% or more. Let's put that into perspective. A typical credit card might have an APR of 15 to 20%. These exorbitant interest rates quickly add up. A small loan can balloon into a massive debt burden. The fees associated with payday loans are just as outrageous. They can include origination fees, rollover fees, and late payment fees. These hidden charges make it even harder to repay the loan on time. Payday lenders profit from these fees. They often target individuals struggling financially, trapping them in a cycle of debt. The payday loan spiral is a dangerous trap. It starts with a seemingly small loan, but the high interest rates and fees quickly make it difficult to repay. You end up taking out another loan to cover the previous one. This creates a vicious cycle of debt. You're constantly borrowing to stay afloat. The stress and anxiety mount as the debt becomes overwhelming. It can feel impossible to break free. The payday loan spiral can have devastating consequences. It can damage your credit score, lead to bank overdraft fees, and even result in legal action by lenders. Section 5. Breaking free alternatives to payday loans. There are better options than payday loans. Payday loans might seem like a quick fix, but they often come with high interest rates and fees that can trap you in a cycle of debt. If you need short-term financial assistance, consider these alternatives. Negotiate with creditors. Many creditors are willing to work with you if you explain your situation honestly. If you're facing a temporary financial hardship, reach out to your creditors. They may offer options like extending your payment deadline, reducing your interest rate, or setting up a more manageable payment plan. Explain your situation and ask if they can work with you on a payment plan. Clear communication can often lead to solutions that are beneficial for both parties. Seek help from family or friends. While it can be difficult to ask for help, your loved ones may be more understanding and willing to assist than you think. It can be tough to ask for help, but borrowing a small amount from a trusted friend or family member might be a better option than a payday loan. They may offer you more flexible repayment terms and lower or no interest. Consider a personal loan from a credit union or bank. These institutions often provide loans with lower interest rates and more favorable terms compared to payday lenders. These loans typically have lower interest rates and more manageable repayment terms. Additionally, building a relationship with a bank or credit union can provide long-term financial benefits. These alternatives offer a safer and more sustainable way to manage your finances without resorting to payday loans. By exploring these options, you can avoid the pitfalls of high-interest debt and work towards a more secure financial future. Section 6. Budgeting and saving. Building a solid financial foundation. Prevention is key to avoiding payday loans. By creating a budget and building an emergency fund, you can gain control over your finances. Track your income and expenses. Use a budgeting app or spreadsheet to monitor where your money is going. Identify areas where you can cut back on spending. Start saving, even small amounts. Aim to save at least $1,000 for unexpected expenses. This will provide a financial cushion to fall back on. Building a solid financial foundation takes time and effort, but it's essential for achieving financial stability. Section 7. Seeking help, resources for financial assistance. If you're struggling financially, don't hesitate to seek help. There are resources available to assist you. Credit counseling agencies offer guidance on budgeting, debt management, and credit repair. Nonprofit organizations provide financial assistance, such as food banks, rent assistance programs, and utility assistance programs. Remember, you're not alone. There are people and organizations dedicated to helping you get back on your feet financially. Section 8. Protecting yourself. Recognizing predatory lending practices. Payday lenders often engage in predatory lending practices, targeting vulnerable individuals with deceptive tactics. Here are some red flags to watch out for. Excessively high interest rates and fees. Annual percentage rates over 36% are a clear sign of predatory lending. Short repayment terms. Loans designed to trap borrowers in a cycle of debt. Aggressive collection tactics. Threats, harassment, or intimidation used to collect on debts. If you encounter any of these red flags, walk away. Protect yourself from these harmful lending practices. Section 9. Your financial well-being, making informed choices. Your financial well-being is crucial. Avoid payday loans at all costs. They pose significant risks to your financial health. Remember these key takeaways. Payday loans come with extremely high interest rates and fees. They can trap you in a cycle of debt. There are better alternatives available, such as negotiating with creditors, seeking help from family or friends, or considering a personal loan from a credit union or bank. Building a solid financial foundation through budgeting and saving is essential. By making informed choices and adopting healthy financial habits, you can secure your financial future and avoid the payday loan trap.